Welcome. This is BQ Prime. I am Agam Vakil. We are taking stock of the futures and options space in the F&O show here. And today is the big day, the monthly expiry, where we see both the Nifty as well as the Bank Nifty options expire on the same day for a change. What we're looking at as far as the indices are concerned, and we've been talking about this, a little earlier as well. We've seen the benchmarks come off, well, rather make highs in this month and then come off, take a step back. And at the moment, we're in a little bit of a range. We're going to take a view of all of this, of course. But for now, to address as to what's really happening with respect to the markets today, in today's expiry itself, we're seeing a lot more, writing around, as far as the Nifty goes, at least, a lot more writing around the 19,700 call. And in terms of many other options as well, we're also starting to see a little bit more writing coming through around the 19,600 put as well. But we're still looking at a range of around 19,800 to 19,600 as far as today's day of trade is concerned. It's a 200-point range. This is based on maximum open interest. Bank Nifty is a little more interesting. Why? Because we're moving in and out of the 44,500 levels, below and above that. Why is this crucial? Because since May, 44,500 has been the level which in fact has been a little bit of a pivot. And we continue to test markets above and below that over the past few months. And in fact, it's in the meantime, the Bank Nifty has also tried and tested a new high while moving above this mark. And now, yesterday, we tested it. And once again, we are trying to see whether or not we close above or below it. So it's going to be an important level to watch out for. Of course, as far as the maximum open interest on the higher end is concerned, we're looking at 45,000. And on the lower end, 44,000 put still has max OI, but it's not going to be as relevant as 44,500. And perhaps we can get an expert view on that to see if there is any confirmation with respect to the trends playing out, not only in today's day of trade, but also moving into the next couple of days as well. Well, we have with us Jay Thakkar. He is CMT. He's also the VP and Head of Alternate Research at Sharekhan. Jay, good morning, and thank you so much for joining in. Very confusing cues, but option premiums are also very, very subdued. What are you making of the markets, Jess? Specifically, let's start with the Nifty.
Hi, very good morning to you, Agam, and good to see you again for a long time. And see, as far as the markets are concerned, I would say that definitely the trend has been down, and since it has hit 20,200. Interestingly, what you see this time around, Agam, is that the Bank Nifty didn't take off its previous highs. So with mid cap and small cap indices, I mean, they also did not take off their previous highs. Technically speaking, first, and Nifty didn't take off its high. Made headlines of 20,000 plus, and there you see, and then the fall coming thereafter. So there was a clear negative divergence. I mean, as there was a reversal in the initial 2 days, that was very clear that most of the indices did not make a new high. It was just the Nifty that made a new high, and we saw that negative divergence playing out, and the correction thereafter coming in. What does that mean is that the short-term trend remains sideways tonight. But on an immediate basis, you see that we had seen a very smart recovery coming in Nifty in the express range session, where the PCR had improved significantly. I mean, it had turned neutral. It's down negative again, but from negative that turned neutral in yesterday's session, making a low of almost 19,950, 19,550, and thereafter closing about 19,700. I mean, that was something I would say a good achievement in yesterday's session. And Nifty's data is showing definitely relatively strength as compared to Bank Nifty, Fit Nifty, or any other indices or index, or maybe as compared to the big cap or maybe IT, any other index. So Nifty is showing that relative strength, and I would say that 19,550 now is an immediate support. The trading strategy from here on for an immediate expiry, that is the next weekly expiry when we have a truncated week again, and option premiums are subdued. Reason being that definitely we have a long weekend to go and the premiums definitely are going to be remaining down. If you see in today's market as well, I mean, we have seen Nifty, basically the premium coming down, both in Nifty and Bank Nifty. So, relatively, if you see Nifty futures is down by 25 points and Nifty spot is down by 11 points, right? So, in the short term, what I believe is that the range of 19,700 to 650, 660 again should be utilized as a buying opportunity. The stop loss should be yesterday's low or maybe below that, so 95 below. What we can target on an immediate basis is 19,800 to 5,900. That is levels we can target, and that is it. I mean, we are not seeing a bounce beyond 20,000 or a move beyond 20,000 as of now. I mean, we really need to check whether the trend reversal, which whatever happens or has happened yesterday, whether that's sustainable or not. As of now, it's just a bounce, a temporary bounce. And so is the case with the Bank Nifty 50 as well. And you can see that bounce and then until the levels of 45,000, 45,200. I mean, and not beyond that. So it's a temporary pause. The downtrend is what I can say as of now. And looking at the rollovers as well. I mean, we're not seeing good rollovers as well. It's very so far. I mean, both are below the 6 monthly average. So now the short-term bounce, but overall trend will be sideways.
Sure, sure. Right. So let's take stock of the Bank Nifty, and well, we are once again at 44. 500. I was just talking about how that's become a little bit of a crucial point around over the last few months. What's your take here on the Bank Nifty?
So, Agam, as I said, Bank Nifty, Nifty are relatively weak, if you compare to Arab Nifty. I mean, see, as I said, that Nifty made a new high, Bank Nifty, Nifty were not able to. And if you overall see the retracement of its previous one, so Bank Nifty had, in fact, reversed from 43,800 levels, right? And then, here you see, this time around, it was 44,180. So we have seen more of retracement of its previous one as far as Bank Nifty is concerned. And suppose if the short-term bottom is in place, then too what I believe is that going forward the medium-term time frame, 46,000 to 44,000 or maybe 43,800, that's going to be the range in the coming expiry. So coming expiry, according to me, is going to be a range bound expiry. I mean, the current expiry, if you see, I mean, what we've seen is has been positive move. I mean, more of which we saw good momentum on the upside. It's just that this week is what we've seen, or since past couple of days is what we've seen profit moving from the high levels. Otherwise, most of the September series has been positive. I mean, it bottomed around, I think, 200 and made a new lifetime high, right? So September has shown both moves up and down, and October is going to be more of less, I would say, volatile, or maybe it's going to be more of sideways. And overall, if you also look at the global trend, I mean, if you look at the crude, if you look at the DXY, that's not pointing out that bottom in the near time. Maybe good strong reversal out there is required to be good bottom as of now. Otherwise, Bank Nifty can just bounce back to 45,000 is what I said right now, or maybe max to 45,500. Not looking levels beyond those levels as of now. So temporary pause bounce is what is expected out there. In fact, relatively it's weak as compared to Nifty. So I would prefer Nifty over Bank Nifty.
But prefer Nifty over Bank Nifty for now. Let's move and shift focus perhaps towards stocks now. At the moment, at least as far as the F&O space goes, we are looking at a lot of traction in MCX. MCX, of course, has moved up around 6.1% on an intraday basis. We are looking at a lot of strength and some good traction coming in. I reckon this is likely be towards the long side. L&T is the other one, which is up also around 2.1%. The interesting thing about L&T is that it showed up on our radar yesterday as well, where we actually saw short covering, if you consider across all series. And today as well, we're looking at a more build up. So I reckon we've likely seen some long building up as well. Vedanta yesterday was weak, but today it has advanced by around 1.1%. So, we're going to have to wait and watch for the data at the end of the day per the power copy, whether or not we've seen some shorts being covered or no. But for now, these are some of those buzzing stocks. Jeff, we'll take your view on a handful of them. Let's start by talking about one sugar company which is in your radar, Balrampur Chini. What's your view here?
Balrampur Chini definitely looks positive. I would say that we have seen good long build up out here. the trend overall technically also, if you see, has been quite positive out here. And in fact, the stock has provided a nice breakout technically from a sideways consolidation as well. So it has got a tendency of moving to the FNO band for sure, but then at least for a couple of days, it will be available in the future, and I believe it will remain so for next couple of weeks. But then the traders' interest out here is definitely quite high. But then yes, Balram Puccini is one stock to keep an eye on. I mean, if you look at all the sugar stocks, they are doing quite good. From the non-FNO segment, if you see, then Rinka Sugar, the Angler Sugar are doing good. But from the FNO back, definitely it's Balram Puccini that has provided the breakout. And I see this stock moving to the levels of 480, 495 in the near term. 444 is a very good support. So this is a very strong buy at this point of time.
Okay. I'm going to club the two FMCG companies together because, Jay has a view on HUL as well as Tata Consumer. Can you take us through both these calls, Jay?
Sure. Well, see, Agam, I think that HUL has definitely underperformed quite a lot. We've seen a significant correction coming in. Just from the point of view of short covering, I'm recommending HUL at these current levels because the risk reward is definitely well in the favor of the goods out here. I think on the upside, it can bounce back to the levels of 25 to 40, 25, 70 in the near term. From the short covering point of view, technically also, if you look at, then it has reached quite an important support level. We've seen a good significant correction out there when the overall fall has taken a 5-minute declining structure, generally post which you see a good retracement coming in. And the momentum also in the near term is quite oversold. So, yeah, 20, 25, 40, 25, 70, these are the short-term targets for it, 450 BP support or the stop loss, you can say. So, the risk reward is definitely very in favor of the bulls out here. And Tata Consumer, this is one stock which has been my analysis long, and we are seeing continuously. If you look at the 3 to 4 months of cycle, FNO cycle of Tata Consumer, then it's very clear that the overall cycle has been quite on the long side. And this time around, too, the stock has provided a good breakout for a sideways consolidation, and I think the trend out here will be continuing on the upside. The target out here will be 920, when the stock was at 875. In the near term, this also looks quite promising, and I think that FMCG and bad FMCG back is looking positive, at least from the October series point of view. And see, hybrid are going to be volatile and pretty weak, but the defensives are going to I think is where the money is going to flow, at least in October is what I think.
All right. Well, there you have it. Well, positive on two consumer companies right now, and looking at an uptrend too. And perhaps the more important takeaway from our conversation with Jay Thakkar is that he is more positive on the Nifty as compared to the Bank Nifty, at least in the near term. Jay Thakkar, thank you so much for joining in and taking us through your views on the markets. But with that, we'll be signing out for now. But don't go anywhere. There's lots more lined up. So stay tuned to BQ Prime.